Welcome to Talk Tickers, where we break down the latest earnings calls for experienced investors. Today, we're diving into United States Antimony, ticker UAMY, following their Q2 2025 results. All right, let's just jump right into the big picture here. This number, that's UAMT's trailing one-year total return, a staggering 540%. Now, to put that in perspective, look at this. That massive outperformance against the broader metals and mining sector, that really sets the stage for a pretty compelling story, right? So let's dig in and find out what's driving this incredible run. The market, well, it definitely liked what it heard on the call. And when you look at the numbers, it's pretty easy to see why. So the day after the earnings release, the stock popped almost 5%. And check this out. It was on significantly higher volume. That tells you the market really bought into the growth narrative they were selling. The headline number absolutely blew the doors off. Revenue surged an incredible 187% year over year to $10.53 million. And it's not just about sales. This number here really shows the turn to profitability. $730,000 in net income for the first half. That's a huge reversal from the loss they posted in the same period last year, a really major milestone. So if you look at the whole picture for the first half, the crucial point is that this isn't just top-line growth. It is translating right down into profitability. And management seems pretty confident, too. They confidently reiterated their full-year revenue guidance of $40 to $50 million.
Okay, let's get into it. Inside the antimony boom, this is really the engine behind those incredible numbers we just saw.
So how did they do it? Well, the company's performance was basically supercharged by a massive increase in the average selling price for antimony. We're talking a jump of over 260%. Just incredible. And for a little context here, you have to remember what antimony is. It's a U.S.-designated critical mineral essential for defense. And the key thing? The U.S. has pretty much zero domestic production. So with a China-centric supply chain and global shortages, the price has just surged. It's a huge tailwind for these guys. And the CEO, Gary Evans, he leaned heavily into this macro tailwind on the call. He's basically positioning the company as the solution to this worldwide shortage. So what are they doing to capitalize? They are aggressively building inventory. Look at that jump. They don't see this as a risk at all. They're calling it priming the pump. Basically, it's fuel for all the sales they expect to make in the second half of the year as they ramp up processing capacity. All right, next up, strategic plays beyond antimony. Because this story, it isn't just about riding the antimony price wave. It's actually about becoming a cornerstone of the entire North American critical minerals supply chain. That's the big play. And they've been making some really aggressive moves to back that up. They're diversifying their ore supply, they're talking to the DoD, and maybe most notably, they've pushed into tungsten, another critical mineral, with, you guessed it, no active mines in the US or Canada. Now, this is how management is framing their competitive advantage, especially with the government. They're saying, look, we've been doing this for over 55 years. We're the only domestic processor. It's like the apple pie analogy. That's a moat a newcomer just can't replicate overnight. And this positioning is absolutely crucial, especially with all the buzz online about a potential $240 million Defense Logistics Agency contract. Now, to be clear, management was very careful to say nothing has been officially awarded yet. But you can bet everyone is watching this one. Okay, but it's not all smooth sailing. Let's talk about navigating headwinds and risk, because there is significant execution risk here. The big question really is, can they execute? Right now, the market is betting they can. But let me tell you, the path from ambitious guidance to actually realizing that cash flow, it is a challenging one. And this right here perfectly illustrates the core financial tension we're seeing. Yeah, they're profitable on paper, you can see the net income, but look at cash from operations. They are burning through cash to fund this rapid expansion and that huge inventory build we saw. So yeah, it all comes down to execution. You've got permitting delays in Alaska, you've got supplier issues with ore being out of spec, and you've got high capital spending and a reliance on ATM equity raises to fund it all. How they manage all of this will determine if they can actually convert this massive opportunity into sustainable value. Okay, so what does this all mean for the next quarter and beyond? Let's get into the next call and talk trade ideas. But first, a quick and very important reminder. This is for informational purposes only. It is not financial advice, okay? So here's our take for the next call. Our rating remains an outperform, but, and this is a big but, you should absolutely expect high volatility. The market is going to be hanging on every piece of news about those government contracts and operational milestones. So with that in mind, one way you could think about playing this setup is with a long strangle. The whole idea here is that you've got these high-stakes, binary outcome catalysts. The trade is basically a bet on volatility itself. It profits if the stock makes a huge move, either up on something like a contract win or down on a major failure. And that really brings us to the ultimate question for UMA. Can they make the leap? Can they transition from being just an opportunistic player riding high commodity prices to becoming a true structural cornerstone of the U.S. critical minerals supply chain? That's what we'll be watching. This is not financial advice.